This meeting will be conducted as a Zoom webinar to allow for public participation and comments. The Contra Costa Transportation Authority does not condone hate speech in any form. We continually strive to make life better for all members of our community and create an atmosphere where everyone feels a sense of safety and belonging. We ask that anyone who wishes to speak does so with civility, respect, and kindness for others. Citizens will have 3 minutes to speak. It is requested that public speakers state their names and organizations, but providing such information is voluntary. Citizens participating in person wishing to speak should submit a public speaker card to the clerk. Citizens participating by Zoom wishing to speak should use the raise hand feature or dial *9 if participating via phone, and the chair or staff will call upon them at the appropriate time. Written public comments received in accordance with the teleconferencing special notice on the meeting agenda will be provided to the members. If authors of the written correspondence would like to speak, they should raise their hand or submit a public speaker card, and the chair will call upon them at the appropriate time. All written correspondence received after that and during the meeting will be entered into the record. Thank you for participating in a meeting of the Contra Costa Transportation Authority.
Okie dokie, well, thank you. I'm calling this meeting to order at 8:32 a.m. Happy New Year, everybody. Madam Clerk, if we can call the roll.
Yes, Chair Thorpe.
Here.
Vice Chair Sauce.
Here.
Member Arndrich.
Here.
Member Fideli.
Here.
Member Nowak.
Here.
We have all members present.
All right, thank you. If we can stand for the Pledge of Allegiance. We don't usually do that. Oh, we don't. Oh, sit down then.
We can do it.
No. Since you said it. All right, stand up, everybody. Get up. We're pledging to America.
I pledge allegiance
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Hey, listen. I'm pro-America. All right. Public comment. Members of the public are invited to address the committee regarding any item not listed on the agenda. Please refer to teleconferencing special notice for public comments. Are there any public comments?
I've received no public comments.
All right. No public comments. We'll move on to consent calendar. Are there any items that need to be removed or Commissioner?
I was trying to
Oh.
turn it off. It was working. That's right.
Any comments? Is there a motion?
I'll make the motion, though. I'll second.
All right, there's a motion by Commissioner Nowak, seconded by Commissioner Sauce. Do we need to do the roll call vote, or do we just say aye?
We do a roll call
All right,
vote.
roll call vote.
Commissioner Arndrich.
Aye.
Commissioner Fideli.
Aye.
Commissioner Nowak.
Yes?
Chair Thorpe.
Yes.
And Vice Chair Sauce.
Yes.
The motion passes unanimously.
All right, thank you. Item 4, regular agenda items, legislative update. I'll turn it over to Lindsay.
Good morning, Chair Thorpe and Commissioners. It is my pleasure to introduce Mark Watts, who is here to provide our state legislative update. Following that, we'll receive a federal legislative update. Thank you.
Good morning, Commissioners. It's a pleasure to be back here after such a long delay in getting here, in person, I mean. I have got a few things to report on today, and I'm sorry. Yeah, thank you. She did teach me how to do that, and I completely forgot. So this is the beginning of the new second half of the legislative year, so not much in new information is available, but there are a few things I just wanted to touch on leading into this point in the legislative session. First off, in late December, the Speaker, Rivas, made committee appointments, and as you know, your local representative, Assemblywoman Lori Wilson, was appointed chair of the Transportation Committee. He reaffirmed a number of other appointments to that same committee, so it's a 15-member committee. And there's several from the Bay Area on that committee, so you have the ability to work on items with collaboratively collaboratively within the region. So they did reconvene on the 3rd, the legislature, and they started the second year formally. And I haven't had a chance to look at any bill introductions that were made since then, but we'll be catching those up and providing any intel to Lindy. So this is the point of the year where the 2-year bills that were held over from last year must clear their house of origin. So that's most of the focus for the legislature in the coming days. Any measure that doesn't clear the house is dead for the season. And then finally, January 10th, we'll see the governor's proposed budget. Speaking of the budget, the LAO office, as we've seen, and I think I reported on last time, had projected the $68 billion budget deficit. And they made some recommendations for addressing that shortfall. Mainly, you could eliminate general fund spending by nearly $10 billion in the budget year, or they're recommending that's one idea. And they recommend that $2.2 billion of that would be money that had been dedicated to transportation. That would be the TIRCP money that we had fought to restore in the current year budget. So I think there's going to be a lot of angst going into January 10th to see if the governor maintains the TRCP allocation or decides to defer it again. And then I think we'll have to put together a game plan to protect that. Some of the other ideas were, overall, you could reduce one-time spending for about $27 billion in solutions over the next couple of years. There's $24 billion in reserves, but it's since it's a multi-year budget shortfall, the reserves would be insufficient to cover the long-term deficit. So we were just waiting, treading water to see what the governor comes out with on January 10th with revised budget year and longer-term deficit numbers. So don't have more to report on that. We did have the report as well from the Legislative Analyst's Office about the red flag warning about the effects of the state's efforts to reduce the carbon footprint from transportation is having an effect on transportation resources, predictably. The analysis they came up with compared different levels, but they really concluded that over the next decade, the gas tax revenue will decline by $5 billion in total. So it's not an annual number. It would be just over that period, $5 billion would be gone. Same experience with the diesel excise tax. So there's a formation of interest in looking at pushing forward on the backfill for excise tax revenues, realizing that in 2030 and beyond, those will probably accelerate this erosion in deficit. So there's been a series of pilot programs under the Commission and the California State Transportation Agency for the road user charge, and I think we're going to see an acceleration of interest and focus on that. Pleased to be to report on the Secretary's Transit Transformation Task Force that was mandated in the legislation that carried the additional restoration of the general fund money for the TIRCP program, and the task force is tasked with looking at the future needs of transit and trying to come up with ways to make transit more accommodating and more sustainable. And I'm a member of that task force, one of 25, so that's why I was pleased to report on that. The first session was more of a housekeeping session. There wasn't a lot of, there was no discussion on policy or framework. We did learn that they're engaging the Secretary's office will be engaging a consulting firm to assist them to provide that strong support that they'll need. And there will be meetings every other month, and the next meeting is in February. And then the last thing I just want to comment on, I've spent most of the last month for different clients looking at ACA 1 in depth, and I only mention that here because it's on the ballot in November, and there's a lot of moving parts now, even though it seems settled to have it enacted and chaptered. There's a lot of interest from different quarters to make some changes to it. So I've been very deeply involved trying to understand who's pushing what button to move any changes into the bill. It's a difficult pathway to go to make the changes in the year, but it only requires a two-thirds bill to make some changes in that constitutional amendment. So I'll keep Lindy apprised of any changes we find that may be heading towards the legislature. So with that, I conclude my report, and I apologize for my voice. I've mentioned that several times when we've spoken on the Zoom calls, the virtual calls. I'm going through a diagnosis process to find out why I keep losing my voice. And I guess probably the bottom line answer is I never drank enough water and I drank too much coffee. So we'll find out if that's really the fact. So I appreciate your patience. It's difficult sometimes to speak clearly when I've got this congestion like this. So I apologize and hope my report was acceptable.
Well, for those of us who didn't know you before, I wouldn't have noticed. But thank you for that. Any questions, comments from committee? Commissioner?
Yes, Mark, thank you. I'm really happy you're on the SB 125 task force, so we'll get reports from you on that, especially with ballot measures coming up. I think it should be publicized as far as accountability and how transit can improve. That's really a good thing. Remembering when Governor Schwarzenegger took the transportation funds when there was a serious budget deficit, is it really off the table still going into this next session that transportation funds, transit funds won't be taken?
Well, I'll put it this way. The general fund ones are in jeopardy because there's no protection envelope around those. They were at the governor's pleasure and the legislature's approval provided to transportation. And that was almost a $5 billion general fund injection 2 years ago, and then we went through the back and forth and settled out with the restoration of the $4 billion this last year. Those are at risk. The rest of the program at this point in time in transportation, the excise taxes are protected under Article 19. That continues to be the case. The TDA and STA funds are protected under Prop 20, if I recall correctly. That was done a few years ago in conjunction, CTA in conjunction with League of Cities did a massive structuring of protection. So those are protected. The ones that probably have a little bit of flexibility, even though they were protected, was to a degree the Transportation Improvement Fund, which is the registration fee that was added under SB1, as well as the EV fee. And since that doesn't amount to much, I can't imagine why they would want to take that. But so I think in general, the programmatically dedicated reserve revenues still remain protected. So we won't see the challenges we had with Governor Wilson, with Governor Schwarzenegger, where they reallocated that money or tried to, and we fought to get it back. So I hope that answers your question.
Thank you. Good luck.
Any other questions, Commissioner Arnes?
Yeah, Mark, it is great to see you in person, and thanks for being here. Going back to the budget, there's two things going on. There's the real deficit of revenues, not what they expected. But we also have that hidden number, which is, I don't know, I thought it was $32 billion, which is the money that the state overspent on unemployment benefits that it owes the federal government. Between the two of those, we're 90 to 100 billion.
Oh, yeah.
So are we, is that in play, or that's somehow just pushed away and nobody's even talking about it?
Yeah, I've not heard any conversations dealing with that, even in the wake of the beginning of the deficit that we're now experiencing for real at the end of the conclusion of last year's budget deliberations. Nothing really dedicated to the last part you spoke about.
Interesting.
It's a hidden, it remains hidden.
it's kind of like the credit card. You spend it at Christmas and it's going to hit you sometime, you know. Yeah, thank you, Mark.
All right, any other questions? All right, seeing none, thank you, Mark.
Thank you.
We appreciate you being here, Mr. Watts. And now we're going to turn it over to Madeline Pike of Tyke Ginsburg and Associates to provide our federal update. She's calling in, so she should be on the line.
Hi, can everyone hear me?
Yes.
Great. Thanks for having me today. And I'm sorry I can't be in attendance. I'm unfortunately not in California, although I wish I was. So there are not too many congressional updates as of today. There's a lot going on, but Congress has been in recess for the holiday for the past 3 weeks, I believe. And the Senate will be returning on Monday and the House on Tuesday. The number one biggest issue is appropriations and the budget right now. I think the last time I was here, I was talking about this, and it's still going on. The House and Senate have not come to an agreement on a top-line funding number for FY24 funds, which is a little scary because we are in 2024 right now. I think that the major things to just note are that the funding for transportation, veterans, agriculture, and energy programs will run out on January 19th, which is 16 days from now. And then the rest of the government, including defense funding and some domestic spending, will run out on February 2nd, which is 30 days. So, you know, obviously there's huge pressure on Speaker Johnson and Senate Majority Leader Schumer to work together to get towards some sort of deal. We've been hearing that they're close, but, you know, it's still early, especially with the legislators being out of town for the past 3 weeks. And it's unclear what exactly will happen, but just a reminder, the House did not pass its transportation funding bill because there was some inter-party fighting, especially over Amtrak and a couple other major transportation programs. So right now, the Senate is the only chamber to pass its transportation funding bill. And I'll also note that both the House and Senate have several appropriations bills that they have not passed. So it's looking more and more like an omnibus or a continuing resolution will be the case for the next year, especially with the election season pretty much already here. So I think that we'll know more when Congress gets back next week, but and, you know, we'll obviously share reports when we hear more on that. Also, next week, we're going to have Tim and Lindy in Washington, which we're looking forward to. There's the Transportation Research Board Conference, and we've set up several meetings with our local and just jurisdictionally relevant members of Congress and some agencies. So, you know, that will be great to continue working with them and building relationships with them to ensure that they can support CCTA's grants and initiatives moving forward. And I think that's all that I have, and I'm happy to answer any questions. Sorry, it's a little bit late today, but it's kind of hard when Congress has been out for 3 weeks.
Okay, well, thank you. Any questions from commissioners? No pressing questions about Congress, since they have no pressing work to do.
We have lots of questions.
All right, thank you so much.
Thank you.
Okay. Okay. All right, we will move on to item 4B, accepting annual audit reports.
Good morning, Chair and Commissioners. My name is Brian Kelleher. I'm the Chief Financial Officer for CCTA. I'm here to present the annual audit. Also, Mays and Associates, David Alvey is going to be joining me in just a minute to talk about their role during the audit process. But on the financial side, I'm here to just give you a quick update. You guys have seen our interim financials for June. We went over that in a little bit of detail in the staff report there, but this will be just a highlight. This has all the accruals, all the debt service, all of the deferred inflows and outflows related to debt, and we'll get to that here. So what's in the aquifer? We have a transmittal letter, which really talks about the authority. There's the certificate of achievement that shows that we're doing everything possible to have full disclosure and transparency, and we're staying up to date on all of the government trends. We received our 11th consecutive year of this award. And we look forward to having our 12th next year. I have presented 11 of these. And there's an organizational chart which shows everybody in the authority. Also, we have the financial section. So in there we have the independent auditor's report. There's a clean audit on our side. David will talk about that as well. The management and discussions analysis. If this is one part of for you to read in the aquifer, that would be the part that really goes into the details and talks about everything we've done from the revenues and expenditures and where we're changing from year to year. But a lot of the changes that we have from year to year is in the capital project side. So some years you'll see a budget of $220 million. Sometimes you'll see a $200 million, $180 million. It all depends on where we are in delivering these capital projects. Government-wide financial statements, fund financial statements, notes to the financial statements, and then the statistical section, that really shows a 10-year trend, and so we'll kind of just cover that just really briefly as we go through the presentation. The number one thing you want to look at is assets. What are the assets, what are the liabilities, and then what kind of is your net position? And as we look at the bottom, you see a negative number, and you always want to wonder, why is there a negative number in that position? You want to have more assets than you have liabilities. But the authority has constructed over a number of years a lot of capital projects, and with that we have debt. And so when you have debt and you don't own those assets, you have no capital assets. So we have the next 10 years of debt in there. So you can see that on the bottom of 2022, we had a negative net position of $354 million. Now it's $313 million because we paid off about $26 million in debt payments. And then there's interest on top of that as well. But from cash and investments, that's an accumulation of cash since Measure C and Measure J have been in the process. And with the next 10 years to go, hopefully we'll deliver all of the projects that we've promised all of the cities and all the different things we have there. We have restricted cash and investments. That's about $15 million. That is every month when we collect our sales tax money, there's a portion of our interest and principal that sits aside in U.S. Bank to make our next debt service payment. So that money is taken off the top before it gets to CCTA, and it's set aside for our principal and interest payments that are done twice a year, March and September. And then we have our non-current assets, which is OPEB. In 2022, there's a little bug right here. Sorry. We have the net asset, and it went from $2 million to $816,000, and I have this in another slide, but interest, as we went through the pandemic, interest rates and everything kind of went really low, and then we had a really strong interest, and that ends on a fiscal year with CalPERS, and it was 21%, I think it was, and so we have this huge net asset of $2 million. Everybody wants to be overfunded in their pension and OPEB obligations, and so we had a $2 million surplus. Last year in 2022, because we always report 1 year in arrear, it was a negative 6%, so you could see that it dropped from $2 million to $816,000. And then capital assets, we do have a lease lease here that we've capitalized, and as we pay the lease every single year, it's about $400,000. That kind of brings that down as well. Long-term liabilities, again, that's your debt. That's your debt service that you're going to have over the life of the life through 2034. That's going down every year. Other liabilities, that's going to be deposits that we hold. That's also going to be accounts payable due as of 6/30. We don't make the payments until July and August, and so that's why that number is there. The deferred inflows and resources, that's just a timing. That's a timing of we actually paid towards our OPEB and pension obligations, but then since CalPERS always reports 1 year in arrears, it's kind of like deferred inflows and outflows. It's a timing of these payments and our obligations. Capital assets, again, we really don't have much. We have, we buy some computer equipment for the Zoom rooms and some of the new microphones here will be part of the assets for next year. So there's only about $95,000 in that. Reserves is new this year, and so what we did is we implemented the reserve policy, and we set the budget at $110 million in the previous year, and we got $123 million, and so that started setting aside our reserve. And what we want to do between now and 2034 is set aside some reserves to ensure that we have enough resources to pay for everything that we've wanted to pay out on these projects and programs. Revenues, you can see we had $123 million this year. It's up just a tiny bit since the previous year. Other general revenues and losses you'll see in 2022. Again, this relates to interest income. You have all of your investments that you have sitting in investments, and you have to report them per GASB as a market value. So if you're holding assets that are low interest rates and interest rates are high, now all of a sudden the market rate is really low, and so that's what's causing that negative market realization that was for 2022 and interest rates, and we've changed our investments are kind of in the 1 to 3 year range, and so as we keep maturing and buying and selling and buying, it's kind of changed, and so now we have about $1.5 million of interest. We do receive a lot of interest related to the bonds, the money we put away on a monthly basis, so that helps reduce our debt service on that side. We have operating grants and contributions. We have capital grants. This is all reimbursable grants that we apply for. It's part of the projects that we deliver. And then we have our expenses. Administration is for the 1% of the salary set aside. So there's a percentage of my salary, a percentage of Tim, percentage of a lot of the administrative staff that goes against that 1%. And a lot of us are also spread to the other departments at CCTA. Project management programs is a lot of that is return to source. Return to source is the money we set aside. So as we collect our sales tax money, 42.5% of that goes to projects. The rest of it is all the projects and programs. So like the money we give and allocate to the bus agency, that's all delivered part of that program. So it's all earmarked. We have the PED, bike, and TLC programs that we set aside money and we pay as those projects are being completed. Regional planning stays about $2.9 million year to year. Congestion management, that's increased quite a bit. There's some extra costs in there for some of the studies and different things they're doing. Debt service and related fees, that's some of the accruals and different things of just $12,000. Again, this is on the government activities. On a cash basis, the payments we make on our bonds are about $45 million a year. So with that, I've kind of covered the major sales tax revenues. Federal, state, local revenues was $19.3 million. Capital improvement program was about $16.4 million on the grants there. Congestion management was $1.4. Transportation demand management, transportation fund. The TFCA money was about $1.5 million. Administrative salaries and benefits. So in the strategic plan, there's 29 different categories, and one of them is this 1% set aside for staff salaries and benefits of $836. Again, it's not all of the administration, it's a percentage of staff that charges to that department. And so we're always staying around that 0.7% of that 1%. Program expenditures, again, that's an allocation of expenditures. We have our local street maintenance, which is about 21%. That's $24.8 million. Transportation projects, we spent about $36 million. The major project are the 680 State Route 4 interchange. Again, as they were wrapping that up, if you think about is the fiscal year of 2022 and 2023, so that goes from July of 2022 when they were completing the project all the way through when we finished the fiscal year in June of 2023. Debt service, $45 million. Again, principal was $26.4 million. In the notes to the financial, it really gets into the details of everything that we have and everything I've discussed. Cash and investments, we have about $139 million. $106 million is invested. Managed investments, we use public trust to help us invest our money, and a lot of it's in U.S. Treasuries. That's $67.7 million. Local agency investment funds, that's about $52.5 million. And then long-term debt, we really go into all of the different bonds, the 2015, the 2017, the 2021. It's about $374 million of outstanding bonds. Another major component is one thing I always look at is the pension plan and other post-employment health care benefits. We always want to make sure that we're as close to being as funded as possible. So CalPERS, as you can see in the market returns in 2021, we earned 21.3%. If you think about if we never prepaid and paid into the CalPERS, we probably only earned 2, 3, maybe 4% at the most at that particular time, and we were able to achieve a 21.3% return. The downside is if we had not prepaid, we wouldn't have lost 6.1%, but as you know, it all works out towards we go towards the end. So you can see our pension liability, it was very healthy, and due to the 6.1% loss, it dropped down to a liability of $1.3 million. But as they finished the FY23 year, we did have a positive return, so that liability should go away for next year. And as we look at our OPEB asset of 816, that will increase again, going up. Again, net position we had talked about, a lot of it is due to just holding the debt, not holding any of the assets, because we build the freeways and we give them the Caltrans, we build these projects, we give them to the local cities. And so we're just the transportation agency that's funding all of these. But since we've started Measure C, we've been tracking it every year on our capital project side. We've contributed about $1.97 billion, almost $2 billion in capital assets for Contra Costa County, and I think that's really spectacular. So with that, the statistical section really goes through the 10-year trends. You can look up everything that we've gone from revenue, debt, economic and demographic information for CCTA, operating information, kind of all the different assets we have internally and the number of POs we issue, every accounts payable, how many accounts payables and checks are we issuing, and so that's some just information that's there for you as well. And so with that, I'm going to turn it over to David. He's from Maze, and he'll give you guys just an update on where we are in the audit process and kind of what our audit process is.
Great. Good morning, Chair and Commissioners. My name is David Alvey. I'm a CPA and audit partner of Maze & Associates, and we are CCTA's independent external auditor. And my role every year is to come in and to give opinion on whether or not my firm believes that the financial statements that are presented to you today are free from material misstatement due to fraud or error. And before we get into the audit opinion, I just want to go over the audit process just 30,000 feet. We really start with an interim phase, and that was back in August, where we look at CCTA's internal controls, the bones of the internal control environment. We're testing disbursements, payroll, those debt service payments, cash handling, to make sure that a single person cannot initiate, approve, and book a transaction without some kind of supervision or review, because that would be ripe for some kind of error to happen in the organization. And we look at the bones, and when we do that, we get an idea of the makeup of the internal control environment. So then when we come back at final, that was in September, when we're looking at the balances, we can get an idea of how much of those balances we have to test to get comfort, because we know what the structure is like. And then at final, we're looking at the balances, so we're just sending out our cash confirmations, we're looking at the debt transactions, your CalPERS, pension, OPEB, that sort of thing, a little bit of capital assets, like you said. We also do an analytical review where we look at prior year numbers compared to current year and see if it makes sense, with the market, with the swing in the pension and the OPEB. Does that make sense? Not only at CCTA, but at other organizations that we audit, and kind of get an idea of if that seems correct. And after we're done and we get all our information and we're satisfied, we do a management representation letter signed by management saying that they've given us everything in full faith, they're not withholding any information, and then that date of that letter becomes our audit opinion. And that's on page 1 of the ACFR, and technically of the whole document, that's the only piece of this document that my firm owns. The second thing we have for you is the Memorandum on Internal Controls and Required Communication. This is also known as the management letter. And this is my firm's communication to this governing body of things that we found during the audit. And they can be categorized in 3 ways. Material weakness, so something material can flow through the internal controls and not get caught. We have none of those. Significant deficiency, that something significant can flow through and not get caught. We have nothing to report there. And then the catch-all is other matters, and we have nothing to bring to your attention there. The second half is the required communication. Auditing standards require that I tell you that we had no disagreements with management. We had no issues with management's accounting assumptions or accounting treatment of things. So like accounting assumptions would be useful life capital assets, fair market value of investments, and even the assumptions from the actuaries for pension and OPEB. Management has to accept those assumptions for return on investments, COLA, all those things. So no issues there. We have no scope limitations. We don't think that management was limiting our scope of our audit, and we don't think that management had a second opinion, a firm kind of waiting in the wings, just in case they didn't like the opinion that we rendered. The opinion is a clean, unmodified opinion and the highest level assurance that we can provide. So congratulations, you passed your audit. Also in the consent item, you had your single audit. That is a federal audit that's required if you receive federal funds more than $750,000, in which you received, I think it was $6.8 million this year from MTC, California Department of Transportation, and DOT. And with that, I'd just like to thank Brian and your finance team. You guys have a great team, and open up to any questions. So I guess the next slide will be questions.
Thank you, David. That takes us, we did do Measure J compliance audit. We select 3 agencies due to the timing of getting things to the board. Those are complete. Everybody did pass, but it'll be on consent in the February calendar. So with this, I'll turn it over to the chair or commissioners for any questions or comments.
All right, thank you, Commissioner Sauce.
Thank you, Mr. Chair. David, I want to compliment you. That is the best plain English explanation of the audit process that I have ever heard. And I've been running around in that world for decades, so really appreciate it. My question is for you, Brian. On the 1%, I'm just trying to make sure I understand how you calculate that. So you are tying it to salary, that it was 1% of CCTA staff salary, and it's measured according to what people allocate their time to. But then there was another $1 million and change administrative expenses line item that does or does not count towards that 1%.
That does not count to that 1%. So what that counts towards, we have 3%. So think of 100%, and then you take off 1% for salaries, and that's where we fell at the $800,000. And then you have 3% for planning and facilities. So our planning department we use 3% of the sales tax revenue to pay for part of our planning. And then we have other grants and federal funds that we get on that side. And then we also have the facility side. So anything related to public outreach, think of office supplies, think of our rent. That is the facility side of that 3%. So let's say roughly each one of them is about $1.6 million or something like that in expenditures, historically what we're spending for the facility side and the planning side. And so it as well bank's money over the years if we're not using it for future use. And so that, I hope that answers your question.
It does, if I may follow up though with one other, and that is, so the tying it to the salaries, was that mandated by Measure J, or is that a reasonable method of calculation that the authority has adopted and consistently applies?
It was part of the strategic plan and the tax expenditure plan from when we went out for Measure J and to the voters. It was a line item of 1% of all future money is to be used for administration.
Maximum, okay. But it didn't tie it to salaries? J, the text of
I'm
J.
going to turn that over to Hisham because he's the expert on the tax expenditure plan.
Okay, that, we can offline on that, thank you.
Historically, that 1% is just for salaries and benefits. We haven't used it for anything else, and it does have a savings in there from the historical, from when we started Measure J until now.
Okay, thank you very much.
Right. Commissioner Noack? No? Commissioner North? Yeah, well, first of all, ditto everything that was said. Great report. Although, my God, the disclaimers, I know you got to do it, but if you really just read the disclaimers and say, what are you here for? I get it, it's trying to narrow it down. But Brian, if you turn to page 21, and I always see this and it always jumps out because it's disproportionate. So this is statement of activity. So we have administration, we're just talking about at 2.435 million. Then we do unallocated pension and OPEB expense. And you see that number relative to administration. So when I see it labeled as unallocated, what it means is that's the total pension OPEB cost for this entity, and it's not allocated to administration, it's not allocated to projects. Is that how I'm reading that?
Yes, exactly. That's not part of it. It's broken out because the pension expense is kind of a movement of, I don't want to get into the weeds, but with GASB 68 and 75, when we start to put this pension expense and pension liability on the books, or pension asset, or OPEB asset, there's movement in that having to do with, because we're a year behind on the pension, so those expenses that we have to hit, normally before 2017 weren't on there, but now we're putting them on there on this line, so they're not skewing your admin costs, because like when the market took a hit or a swing, that causes that expense to either go positive or negative. So if you have that lumped into your administrative cost, which is your annual cost, that could swing it down and up and not make much sense. So that's why we break it out into a new line item.
So I see that, but shouldn't that have a footnote, because technically that admin cost based on that limit, or being under 1%, we have to count for all the labor costs. So that is benefits and everything. So are we doing that in our 1%, or are we throwing it into this single line item, saying it all lies there and it's not allocated in any one of these areas, but it shows up as an expense?
That shouldn't be a normal, like, administrative salaries and benefits expense, because it's purely a accounting treatment per GASB 68 and 75, and has nothing to do with actual cash going out the door in terms of salaries and benefits.
Okay, so that's purely about, but the actual payroll cost, where we as the employer is included in each of the salary categories in administration in the other areas, not the debt liability change in valuation. That's correct? Okay, just wanted to make sure. All right, thank you.
Yes, Commissioner.
Yes, thank you. I have just a few questions for quick answers here that I found looking through the document, and great job, Brian and Dave, really incredible. There was a mention about a Moraga audit that's pending. What is that, and how does it relate to the CCTA?
So when CCTA adopted Measure J, and even when they had Measure C, which started way back when, part part of the requirements was anybody receiving return to source funds for the local streets maintenance, there's an 18% that was in Measure C that carried over to Measure J, and then there's a 2.1% that is part of Measure J. Any funds that we send to a city, every year, we select one city and we audit their use of that money, and is it being applied per our standards and per our resolution for that. So after all of these years, we've done every single city except for one, and we'll do that one city next year, and then we'll randomly select going through all the processes again for the other individuals, and that was done by Mays as well.
Great, thank you. The point was made that, and this is quotes, project milestones which resulted in reduced expenses. Can you articulate what those project milestones are?
I'd have to, where was the project milestones? I mean,
I don't know the page, but I just jotted that down.
a lot of the different milestones that they're doing is reducing traffic or implementing how many new not lanes, but
and that resulted in CCTA expenses?
yeah, we do a lot of work for, like the TLC, the Transportation Livable Communities grants that we give all of the individual cities, the ped bike programs. That's either $7 or $8 million a year that we're doing. That's adding benefit and doing some of the things for the local agencies that apply for the money and use the money.
Okay. And this may be what Lindy and Tim are going back to DC, but you also mentioned that revenue increases because of additional grants that were achieved in this year. Is there any specific area of grants to make highlight of?
We've received over a number of years a lot of money for the innovation program. We also received grants related to some of the highways and different things like that. And so, you know, we're always looking at different revenue sources, because if you think about the $2 billion of assets that we've built, Hisham has mentioned this before, for every dollar we spend, we get an additional $2 to $3 in grant funds so that we could do these. And so there's grants that are applied to everything, whether it be the 511 program, the TFC money is part of that as well. There's grants for, you know, pretty much every single department is getting grants, and we look at the Safe Streets for All. That's coming up in next year. There's a lot of grants, and I think Hisham can list off a number of grants that I haven't really been mentioning.
Well, just carry on. I just think that's great. I just want to say that is a direction that is of benefit. And finally, in the memorandum of interest, control, and required communications that Mays included at the end of the material, you talk about discussions with CCA didn't have anything to do with the retention of service for Mays. Does CCTA have a policy of changing auditors every so often? Because I know our city does, that it's beneficial, and just good to have some new set of eyes coming in and looking at this. So will Mays be continuing next year, or what is the system with the schedule?
This is the first year with Mays. We've been with MGO previously, and so we went through a full RFP process. We interviewed 3 different firms, and we selected Mays as the most qualified for CCTA. And so we, you know, based off of your appreciation for their presentation and all of their work, we will continue to work with them.
I concur. Thank you very much.
The answer is yes.
But we won't work with them forever. Any other questions?
Mr. Chairman, I have an answer to Commissioner Sa's question.
That was fast, thank you.
Yeah, in terms of the administration category, it specifically states it's for salary and benefits cost for administering Measure J, basically.
Thank you.
All right, thank you. Nothing else. I believe we need a vote on this one.
Yeah, we should ask for public comment first.
Oh, public comment. Are there any members of the public who wish to speak?
I've received no public comment.
All right, seeing no public comment, is there a motion?
I'll make the motion to accept.
Yeah, I would second that, and we're accepting it to recommend it to go to full board.
All right, so there's a motion by Commissioner Nowak, seconded by Commissioner Arnich. Roll call vote, please.
Commissioner Arnrich,
Aye.
Commissioner Fideli,
Aye.
Commissioner Nowak,
Yes?
Vice Chair Sauce,
Yes.
Chair Thorpe,
Aye.
the The vote is unanimous.
All right, item 5, correspondence and communications. I don't think we had any. 6, commissioner and staff comments. Any commissioner comments? Executive staff?
No comments this morning.
Okay. Other business? No other business. We will adjourn this meeting at 9:21, and our next scheduled meeting is February 1st, 2024 at 8:30 a.m.
All right. Everybody was on time for our first